Hello from Tokyo. My name is Katsuhiko Hara, and I'm the deputy publisher of Nikkei Asia. Just until a few weeks ago, I was based in New York, leading Nikkei Asia's team in the United States. While I was there, I had the opportunity to attend a seminar like this one that we co-hosted with Asia Society. I remember it was a very successful and engaging event, and I hope today's discussion will be just as valuable and beneficial for everyone joining us. At Nikkei Asia, technology is one of our most important areas of coverage, and artificial intelligence is certainly high on our priority list. At the same time, we continue to emphasize our strength in reporting on the financial sector and financial markets across Asia, whether that's cryptocurrency, fintech innovation, or more traditional coverage such as the Bank of Japan's monetary policy. Bringing these two worlds together, we're very pleased to present today's discussion, AI in Finance and the Future of Decision-Making. I truly wish I could be in New York to experience it in person. Thank you very much for joining us, and please do check our Nikkei Asia if you haven't already.
Thanks to you, our valued readers, Nikkei Asia has been able to invest further in delivering independent quality journalism from Asia to the world. From award-winning analysis on the US-China tech decoupling, human rights issue, and the global trade, to exclusive interviews with the people in power in Asia and breaking news from all over the region. Our team of over 1,500 journalists and an ever-growing dedicated newsroom will strive to uncover the stories that other publications miss. Nikkei Asia, the voice of the Asian century.
Thank you, everyone, and welcome. I have never been more grateful to be the moderator instead of the panelist, because I have learned so much just in the last hour chatting with you both about AI. And before we get to the role of AI in financial decision-making and in investments, I just wanted to ask both the panelists for a bit of context about before we drill down to finance and investing. And I'll start with you, Vasant, because you're the teacher, and I would like to ask you, to what extent do you think AI today is more benign than dark, and will your answer be the same 5 years from now?
Well, Henny, I thought you were going to start with a simple question. So you really started the innings with a curveball here, I see. I'm an optimist, and so that should, I guess, tell you, in which direction I lean. I'm tremendously optimistic about AI, but I'm also very terrified by some of its potential consequences. And one of the reasons I wrote my book is because, and by the way, it's called Thinking with Machines, because I think the future is about thinking with machines. There is no opting out. We are, for the first time, inhabiting a planet with an alien of our own creation that's getting smarter by the day. And there's no getting away from this. So that's what the future is about. But on balance, I'd say it brings a tremendous amount of value to humanity. But it's important to be cognizant of the risks that it brings to the table as well. So this is a double-edged sword. But on balance, I'm highly optimistic that it'll lead to prosperity and more knowledge and accelerate the discovery of knowledge.
Thank you. Alok, I'm going to turn to you now and ask you whether you think AI will, within 5 years, supplant human intelligence or supplement it and augment it.
Oh, I think the straightforward answer is supplement. By the way, coming back to your first question, if I may say a little bit of history, my association knowledge of AI was at the site of my former boss, Masayoshi Son. That was back in 2014 when I first joined SoftBank, and he would talk about singularity with kind of devotion, he was animated about it, and he remains an AI accelerationist, and some of that has rubbed off on me, I guess, in terms of being optimistic about AI. I do worry about the risk, and I'm sure we'll drill down on it. I worry a lot about one of the things we talked about is the notion of cognitive dependency. I really do worry about, and I talk about this in my book, my memoir, which is, the dumbing down of the human race. So to me, it's much more of that than any Terminator type scenario. But happy to talk more.
Can I just add something to what Alok just said, which is that, throughout my career, I got into AI as a PhD student in 1979. My thesis was in an area of AI called planning. My experience in the field has been that throughout my career, AI has overpromised and underdelivered. And I think for the first time, that has reversed. And in fact, now we are just sort of beginning to get our heads around how fast it's accelerating and how much it could change things. So we are actually surprised by this, this development where it seems to have gotten ahead of us, as to, ahead of where we expect it to be.
I'm going to turn to you, Alok, to ask you a question I wasn't anticipating. I can think of many ways to describe Masayoshi Son. Would you say he was a visionary? And do you think it will be possible going forward for any human being to be a visionary? Easier or harder going forward?
Yeah, Masa is one of those who's easy to admire and impossible to emulate. So he is a visionary, and that's an opinion that's kind of easily substantiated by the facts. He saw the internet revolution. He's in very early on Yahoo. He saw the mobile phone revolution. Bet big on a almost bankrupt phone company in Japan. That was his comeback story. He saw the evolution of the mobile internet when he bet on Alibaba, which is arguably the biggest best venture capital investment of all times in terms of realized returns. And he bet big on ARM, UK company, semiconductor company, not a manufacturer, but a company he bought for $30 billion. It's worth 250. Again, betting on this notion that in the semiconductor space, intelligence, in the age of AI, intelligence is going to be closer to the edge of the network, and he saw that almost 10 years ago. So it's quite a remarkable track record of spotting mega trends. We talked about AI. He was talking about AI with religion back in 2014. And now, of course, he's the biggest single in terms of dollars investor in OpenAI. So yeah, absolutely, he's a visionary. It's not something you can teach, but yeah, he's a visionary. And I think we need people like that. So I sure as hell hope that AI or no AI, we will have people like that. They're interesting and they're kind of fun to watch, too, entertaining sometimes.
One could argue that he was such an outlier by his circumstances in a society where hierarchy and seniority are treasured. Do you think, Vasant, turning to you now, that it's harder to become a visionary in an AI-dominated world or easier to become a visionary in an AI-dominated world?
I don't think it really makes a difference. AI on the way. That's sort of a gift or a talent that some people just have of seeing the world way ahead of others. So I'd say that AI really has nothing to do with that. I don't think it would change things one way or the other. It may make it possible to just explore more things. So, one of the things I talk about is that we're sort of leading, into a bifurcation of humanity where the smart gets smarter, right? So it's like the rich get richer kind of phenomenon, that it has the ability to amplify some humans, while disempowering others. So to that extent, I guess one could argue that it may lead to more Einsteins, and more visionaries. But I don't think that AI itself has anything to do with, whether, we'll see fewer or more visionaries in the future.
When you talk about bifurcation, do you mean within societies or between societies?
So I'm talking about at the individual level, right? So within a society. Now, one could also ask this question at the enterprise level or at the country level, but I'm talking more sort of at the individual level, where it may have an effect of increasing inequality, because it just amplifies some people who already have the chops and the knowledge to leverage themselves. While it also has the potential of sort of leading to cognitive decline. And I can think of like my own use of maps and navigation devices, and I feel like I don't navigate as well. And so I've tried to navigate without maps these days, just to sort of exercise that cognitive muscle. So it does have that potential to make one lazier, because it just gives you the answers, right? And so there isn't that need for sort of hard thinking the way there used to be. But at the same time, if you really know something, it has the ability to amplify it, but it can't amplify something you don't know.
So Alok is writing a novel. Alok, is AI helping you in writing your novel? And if so, how? Does AI help creativity blossom, or do you think it suppresses it?
Oh, no, and neither when it comes to creativity. I mean, my usage is fairly obvious. It's a fantastic research tool. If you're world building and you're trying to write a scene in Times Square in 1988 and you want to get a sense of, what music might have been playing on a ghetto blaster, it's just a great research tool, right? So for that stuff, it's great. It's fantastic for editing. You've written a text and you want to, kind of the function of a copy editor. So it's great for those sorts of things. In terms of creativity, well, at least so far, and this is interesting, I think. I mean, the way AI works is you predict what's next based on the way models are trained. You predict what's next based on analyzing what came next before. That definitionally is pretty much how large language models work. So that's a process almost by definition precludes creativity, doesn't lend itself to creativity. Having said that, I don't doubt for a minute that the Altmans and the Demis Hassabis's of the world can crack that problem. Right now, they just don't have any incentive to do that because it's not lucrative you don't make any money writing. It's not worth OpenAI's while to disrupt writers. They'd much rather, if you're Claude or an Anthropic, you just much rather go after $500,000 a year engineers as opposed to penniless writers or poets. What's the point? But AI could get there if they made that a priority.
We'll come back to the incentive question. The lights are so strong on stage that I can't see you all, but I wanted to ask you all, how many of you agree with Vasant's concerns about cognitive decline? Do most of you share that concern today?
Fair number, it looks
Yes,
like. Yeah.
yes. Second question following up. In 5 years, will you fear that cognitive decline even more?
That's a great question. And the follow-up question I sometimes get asked when I talk about this bifurcation of humanity is, what do you think the proportion of people are going to be on each side of it? And I try to avoid answering that question because, as someone said, it's difficult to make predictions, especially about the future. But if you were to really sort of push me, I'd say, I can imagine a future where every child has access to an amazing oracle, a tool at their fingertips that we never had growing up, right? So in that sense, I feel that it could also be a leveler, right? If it gives every child equal opportunity, equal access to this amazing teacher that we never had, 10 years ago, then that also becomes, it sort of, at least at that level, it provides equal opportunity. And that's why I'm sort of, on balance, optimistic. Because I think the future will depend on policies that we adopt around AI, and at the moment there aren't any, which worries me. So I think it's time to really start thinking seriously about what policies we should craft around AI and around its use. And we can get into, deeper into that anytime you want.
I think we'll come back to that. Let's start talking about AI and decision-making in finance. And let's start off with risk. So there were three kind of areas that I thought about, but from your point of view, does AI result in more risk or in less risk? Alok, you want to take that first?
Yeah, sure. I mean, depends on how you define risk. I'm not, and I'll give you my perspective. I'm not a trader in markets. I don't trade actively. I'm pretty much a buy and hold type person. From my perspective, what I really worry about is tail risk, bubbles forming, bubbles bursting. And to me, to the degree AI fosters groupthink, I mean, if a lot of hedge funds are using Claude or whatever, and it tends to kind of crowd people into the same types of investments, and then you run for exits at the same time. So to the degree it increases tail risk, systemic risk, I do worry about that. And at the margin, I think it probably does. So I'd come down on the side of saying it increases systemic risk in financial markets. And that's the only kind of risk I worry about. The risk of, kind of these big 2008 type events.
Vasant, you will have very strong opinions about this. To what extent does it increase crowded trades, which will result in volatility and then bubbles and the bursting of bubbles?
So the way I look at the trading landscape, and so if I put on my trading hat, I trade every day, rather my machines trade every day. But I look at the trading landscape into sort of high frequency, which is, your holding periods are less than a day. You're flat at the end of the day, right? Just high frequency trading, very low capacity. You can't put that much capital to work on it. Then you have sort of the short-term space where you have holding periods of let's say days to weeks, and longer term where you have months to years. I'd always viewed AI as sort of being relevant to the first two, because there's lots of data, and that's sort of where I got started, in the sort of short-term trading, and then high frequency, I don't do that anymore, but I'm still in the short-term space. Over the last 3 years, I've built a system to think like one of my colleagues who does valuation, long-term valuation, and it's only became possible with LLMs, right? So my colleague Aswat Damodaran, Mr. Valuation, and so I built this thing called the Damodaran bot that thinks like him. And so someone asked me, he says, what happens if it gets so good that everyone wants to use it, right? And there I agree with Alok that it would then increase sort of the crowdedness of a trade or the crowdedness of a market if everyone's doing the same thing. And in that sort of situation, if there's an act of God or there's a reset and everyone heads for the exits, you get like a massive dislocation in markets. So it has the ability to increase that, what Alok calls sort of the tail risk. But in the other spaces, I would think that it would decrease volatility because people are coming into the market seeing an opportunity and therefore sort of, aiding in price discovery. So that's what I see it sort of, on a day-to-day level, it should decrease volatility because there's more information available to people. But it does present this sort of tail event scenario where everyone's in it because the machine's telling everyone to be in that trade.
Can I just make one more point on this? I think it's an interesting one. So I think there's a tendency, it's a little bit counterintuitive, there's a tendency to assume that because of AI, investing will become more analytical, et cetera, et cetera. I actually think the opposite. I think the human element of investing actually becomes much, much more important. And just to elaborate on that, Aswat Damodaran, great investor, great thinker. When we think about practitioners in financial markets, I don't know if the name Julian Robertson is familiar to people, arguably one of the greatest value investors of all time. but famously completely wrong-footed, because back in 1999, he called the top of the market and then watched the market. He was short the markets, watched the market doubles, went out of business, shut down his Tiger franchise literally a month before the bubble burst. The point being, investing is frequently, now if you'd asked, if you had AI algorithms, a Damodaran bot back in 1999 would have said sell, sell, sell. But then you would have missed out on a doubling of the market. So it's all about playing these cycles. Investing is frequently, trading is frequently about playing these emotional cycles. And I think that human element is more important than ever. It becomes much, much more of a differentiator. The information edge, the analytical edge is completely commoditized.
Do you agree with that? You don't believe in information asymmetry? Question.
I don't completely agree with Alok on that, because I think in the shorter term, there will always be varieties. Opportunities sort of arise, they go away, and it's sort of a treadmill. Like, people are constantly sort of looking for patterns that have emerged before reasons for them become apparent. So in the short term, I think there's plenty of variety. In the long run, I tend to agree that we can get into sort of this sort of crowdedness and a similar mindset, because everyone's going the same direction, in which case the edge becomes...
AI reinforces that one-way momentum.
Well, it can, right? I mean, if everyone starts trusting the machine and saying, well, I'm just going to passively follow it, then it's almost like the entire market becomes passive and can completely,
beta, as you wrote.
That's right. I mean, AI becomes the market, and then so it becomes the beta, and then the human edge is knowing when the AI is wrong.
Now, that's fascinating. Can any of you guess how you go about knowing when the AI is wrong? Raise your hand. Explain.
Well, I mean, that's the human edge, right? That's sort of...
Can you give us an example?
Well, yeah,
Where you saw the momentum going one way and you said,
sure, but the Iran war, for example, right? So acts of God or the war are things where the machine doesn't have enough knowledge, doesn't have the context, it was not part of its training data, it has no basis for making a decision. But that's when human intelligence sort of comes into the picture, right? You can reason about the war, you can reason about Iran's drone force, and you can reason about those things and make a decision that's sort of uniquely human that the machine has no basis for making.
In your book, toward the end, on your chapter on investing, you go through BYD, the electric vehicle maker, and you're looking at elements including the stock price, the environmental factors, the news, et cetera.
Yes.
Is that very different using AI than not using AI? Would you come to different conclusions, do you think?
Well, you might, but I'll say that, so I wrote that chapter in 2024 when the Damodaran bot made a call on BYD, a really good call, saying that it had potential and it was undervalued. But here's the interesting thing. So I was running the bot several times between September and November of 2024. And in September, early October, it was really bullish on BYD. It said they have great battery technology, they have presence, manufacturing capability in California, so it was really bullish. Towards the end of October, it started talking about tariffs and stuff like that, right? In anticipation of a Trump victory or the possibility of a Trump victory, which I thought was really interesting, right? For the bot to be able to think about those kinds of things was really impressive. And I find myself increasingly going to the bot. So, I was speaking at a conference on credit at Stern a couple of weeks ago, and there was really concern about the software companies. And so I went to the Damodaran bot. I said, tell me what you think about Adobe, ServiceNow, Salesforce, and now I'm the proud owner of 3 software companies. So I was influenced by that. So I'm not sure what the question was, whether I've got a feel of it.
Whether, the valuation process is different using AI and just using your knowledge of the market
It is.
to value.
It is, right? It is different. As Jeff Hinton said, these things think differently from us, right? And that's so true. They think completely differently from us, and they can add to our thinking, right? And that's what I mean by thinking with machines. It's really using the machine as an aid to sort of amplify yourself, just to sort of get more clued up, to be able to run scenarios that you could never run before, right? You can tell the bot, assume that the Trump administration will continue with its tariffs, right? How would you value Apple, right? Or assume that this is a head fake and it's going to go away in a year. How would you evaluate Apple? Very difficult for humans to do, in the blink of an eye or pressing a button. But that's the kind of stuff that becomes possible, like envisioning different scenarios and thinking and reasoning about them.
Does that describe what Masayoshi Son does,
Well, this
Alok?
is just, I think a more interesting question for you is, I was just thinking there's an inherent contradiction that Damodaran bot is trained to think like Damodaran. It's not, there's no original thinking. You've trained it to think like Damodaran. My question is, does the Damodaran bot outperform Damodaran?
Great
I'm sure you've
question.
tested this. I'd be just curious.
So that's a hard question, but let me answer a slightly simpler one. So I ran the Damodaran bot on NVIDIA pre-earnings and post-earnings, and I showed both the reports to Damodaran. I said, what do you think? And he said, there's a bug in your bot. And I said, what do you mean? Yeah, and he says, well, earnings reports from NVIDIA at this point are pure noise. It's all data center sales, and it doesn't change my valuation one bit. And your bot seems to have upped its evaluation just because they beat earnings, right? Now, this comes back to your question. Like, is it a bug in the bot, or is it a bug in Damodaran? I'm not quite sure, right? So it has adopted this human tendency, right, as annoying as that might be, that it is affected by earnings announcements, just like human analysts would be. So I can't claim that it thinks exactly like him.
By the way, this is a very interesting segue into your Masa Son question because it relates to NVIDIA. So back in 2016, believe it or not, and I relate this incident in my book, Masa wanted to buy NVIDIA, the entire company. And back when it was still outrageously valued and most bots but we didn't have bots, but analytically I thought it was overvalued. But we figured he could have bought the company for $83 billion, which seemed like a lot of money at the time. We did our numbers, we met with Jensen, and Jensen preempted that dinner or the dinner discussion by saying, Son, I know how you think. I know you want to buy me. Don't even think about it. Okay, because there is no way CFIUS, which is the Committee for Foreign Investment in the United States, is going to let you anywhere near NVIDIA. And obviously he was right. What Masa ended up doing is 50% margin. He bought 5% of NVIDIA, and he did very well. But point being, he thought about that. He wanted to buy 100% of that company for $82 billion. That would have been about a 45% premium to the market price at the time.
Very interesting.
That's kind of pretty outrageous, out-of-the-box thinking, and that's what being a visionary is all about.
One of the things that you keep saying is you have to ask the right question, which is terrifying for a moderator. I totally get that. The most...
As a podcast guest, I can completely empathize with that. Because I feel terrified every time I have a guest.
You talk about, you started out high-frequency trading, then short-term trading, where you are now. At the same time, one of the things that you talk about is that the more you trade, the more data you have, and the wiser you become. Is that why you're a short-term trader? Is the methodology totally different for a long-term trader, and does it hold in all markets, all different kinds of markets?
I mean, those are two completely different games, like the short term and the
Elaborate.
long term. Yeah. So in the short term space, so the reason I got into the short term space was because, and this was like in the early 90s, I just thought that, completely untested, that a machine should be able to learn to trade better than humans because it would avoid their biases and, and predispositions, and it would be more objective and unbiased, right? So that was my thinking, but I had no idea whether it would work. And several people, including some of my colleagues, told me I was completely insane to think that a machine could trade on its own without a human in the loop. But I got started there because I felt that there was lots of data available, and a machine should be able to learn how to trade. Right? So it was a purely statistical kind of an exercise, right? That if I have lots of data, if there's any kind of structure in the data, the machine should be able to find it. And I'd had success with other problems. I talk about in the book, I'd worked with AC Nielsen Household Services, where they give you a whole bunch of data about consumption. And I found that...
That's the coupons on Thursday.
Yeah, so a lot of older women in the Northeast were shopping on Thursdays. And when I told Nielsen that, they said, oh yeah, that's coupon day, what else did you find? And I was just ecstatic that the machine had found something like that without being told what to do. And so I thought, well, if it can do that in this domain, it should work in trading as well. But the idea was purely statistical, lots of data, find patterns, and trade them, and hopefully be able to make sense of them, because that's the important thing. You have to be able to explain to someone why the model works, right? And that's one of the most vexing aspects of machine learning, is making sense of things, right? Because it'll surface patterns for you, but sense making is the challenging exercise. But to come back to your question, that's a numbers game, right? Short-term trading. Long-term trading is a thinking game. It's really sort of thinking through scenarios, thinking through possibilities, thinking through what's likely, and then making that bet, and then revising your bet if the future turns out to be somewhat different. But that's what it is. You're taking sort of, with long-term investing, you're taking a small number of high conviction kinds of bets. With short-term, you're taking a large number of low conviction bets, right? So they're fundamentally different in nature.
How would you characterize what you learned from Masayoshi Son about investing? Is it completely intuitive, very different than what Vasant just described, or no?
Totally different. I mean, I'll go back to what I said, which is Masa's easy to admire, impossible to emulate. So I learned a lot from him, but there's absolutely nothing I can bring to bear on my own investing decision. He's a visionary, and it's just very, very difficult to emulate. And the way he backs himself, I mean, it's nuts.
But he's been massively wrong on some bets as well.
Which
is what it is to be human.
Here's the thing: he's a terrible trader. So let's separate that. I would not necessarily, with due respect, trust Son-san to trade money, to manage money for me. But having said that, in terms of the big bets he's made, companies he's bought, Arm is a great example. 43% premium is what we paid to buy that company for $34 billion. It's worth $250 billion today. And so that's not a trade, that's a company he bought. It was an operational transformation. The company was basically, at the time, simply designing chips that went into smartphones, and now it's chips that go into intelligent chips, embedded intelligence that go into the edge of the network, and that's driven phenomenal growth. So he was terrible. He almost went, he was still a billionaire, but he lost 95. He was in the Guinness Book of World Records for having lost the most money ever in the year 2000. That's because he didn't get out in time with the internet when the bubble burst in 2000. So he called the trend right, but he's just not very good at trading the markets. It's two very, very different things.
Very different to be an entrepreneur
so to
and
have
to
the
be an
visionary skills of a Son-san, kind of with a Damodaran bot to guide him, I think would be a world-beating combination.
We should talk some more about that.
So I was at Stanford at one point, and they give this test to everyone, and more than 50% of people, no matter what their background is, get it wrong. So your instructions are, the answer can be a range, and it can be as broad as you want it to be, and yet everyone scores abysmally. And the test is things like, how far is the moon from Mars? So you could say 1 mile to infinity and get total credit for it. And the point is that people think too narrowly, and they especially think too narrowly when it comes to scenarios. And I'll just talk about Blackrock for one moment. And when our founder founded Blackrock, before that, he had been a mortgage trader at First Boston, and they lost a ton of money in the mortgage markets twice because interest rates moved 150 basis points in a short period, and no one thought that was possible. So that bias to have very limited thinking in your scenarios, does AI compensate for those kind of biases that seem almost built in to us as human beings?
It can. So, since we were talking about the Northern bot, one of the things that we've tried to do is to give the human the ability to express a thesis, like assume that tariffs will continue or assume that they're a head fake, right? So it gives you the opportunity to explore things that you couldn't before. So in that sense, it has the potential to get you to see scenarios that you might not envision otherwise. I'll just say one more thing related to your question, because I think it's really relevant, which is the work of Phil Tetlock. He wrote a book called Super Forecasting, I think, or Super Forecasters, where he talks about some people have an uncanny ability to predict the future really well. Very few do that.
You have a quote somewhere about only fools prophesize, I believe.
Indeed. So I'm going to be a fool here. But so some people have the ability to do that, and the reason they have the ability to do that is because they ask the right questions, right? So such as, what's the probability of a recession next year? If I ask that question to my MBA students, they immediately start talking about the Fed, interest rates, employment, all that kind of stuff, being business students. And the answer is no, wrong, right? And what Tetlock says is that you should take the outside view of a problem first. That is, if I knew nothing about the problem, what's the question I would ask? And the question should be something like, how many recessions have there been in the last 100 years, right? That gives you, what he calls a base rate. It grounds you. And so, to come back to your question, I think a lot of sort of clear thinking is about grounding yourself in the right base rate. That is, without knowing anything at all, what's the chance of something happening? And AI can help with unearthing things, data of that sort. So it has the ability to actually free you of biases. So it has the possibility of doing that.
Are biases and experiences the same thing?
No. I mean, I think I have, in my old age, become increasingly aware, and I think it's a positive, of my own biases. And I owe a debt of gratitude to Daniel Kahneman, who, just a wonderful book, which most people, if you haven't, you should read it, Thinking Fast and Slow. And, think loss aversion, people hold on to your losers, things you're losing money on way too long. It's a basic human trait. You talked about, the distance question. Kahneman in his book has this wonderful example, to illustrate anchoring bias. If you ask a group of people, he did this experiment, how old was Gandhi when he died? And then he asked the question, different set of people in a different way, how much younger than 100 was Gandhi when he died? It's the same question. The spread between the two sets of answers was 11 years. Why? Because by saying 100 years, I've anchored you. So, people, that's human bias. And machines, AI, will not have that bias. And we're all susceptible to that. My investing decisions are frequently influenced by random conversations I might have had with, I meet someone highly intelligent like Vasant. We have a cup of coffee and he says something about NVIDIA or whatever, and it's like I'm anchored and I'm just probably more likely to be positive, and that may or may not be the right decision. Point being that humans are subject to bias, and I think being aware of those biases is terrific, and AI is a good source of checking on that.
Kahneman did say that the human mind is a very poor measuring instrument. He was a podcast guest of mine, may he rest in peace. But he's the one who said prophecies are for fools when I asked him, like, which way do you think AI is going to evolve? And which I use quite frequently when I'm asked a difficult question.
The most interesting article I ever read about the last election was in the Wall Street Journal. And this gets to the importance of the right question. And they had done an interview with somebody who bet massively that Trump would win. And he said, I only paid attention to one poll. And that poll did not ask, who will you vote for? It asked, who do you think your neighbor will vote for? And that got into the fact that a lot of people were reluctant to say they voted for Trump. The question is so significant, right? That one difference made all the difference in the world. When you look at AI tomorrow, what do you think is the most important question?
Well, I think there are several, but I think the most important questions are related to governance of AI. And what I mean by that is three things. One is, are there areas of human activity where we want to exclude AI? That we absolutely don't want it to be part of that aspect of our lives, such as, is it okay to be arrested by a robot? Right? Is that a world we want to live in, or do we just want to say no?
Very interesting question.
Right? That's something where we want to exclude machines, right? The other is, should AI have any obligations like humans do, like human professionals do? Finance professionals have a fiduciary obligation. Healthcare professionals have a duty of care, duty of loyalty. AI machines at the moment have no obligations at all, right? You've had cases of 2 teens committing suicide. The company settled privately and said, oops, sorry, we'll do better, right? But there is no obligation on the part of AI. So that's the second thing. The third thing, and this is particularly true with all this excitement around agents and giving machines agency, is how much agency do we want to give them, right? Should that be limited in some way, right? Should machines have the right to run a company and hire and fire a board and enter into contracts? We haven't even begun to think about these things, and they're important, right? Should we have the possibility of creating a bot that manages our estate after we pass away, right, as opposed to a foundation, right? Would Musk or Bezos be more comfortable with a bot managing their money that's more attuned to their values, or at least what they think are their values? So these are the sort of really important questions that I think we face around governance of AI.
And to take it back to finance, do you think AI makes a level playing field more or less likely?
Alok, do you want to take that while I think?
Well, no, I think I already sort of answered it. I think to me, AI just makes the human element of investing just much, much more important. It's controlling, your biases, loss aversion, courage, bold, visionary investments. Those are the things that kind of become the big differentiators.
You are now...
Because again, the information edge, legal information edge, is commoditized. Everyone's got, thanks to AI, it's just become much, much more democratized.
So in that sense, it should level the playing field. Yeah.
You are now an advisor to Warburg Pincus, a private markets player. People like Mark Rowan at Apollo talk about the convergence of public markets where there's more transparency and private markets. Do you think there's a huge distinction or a narrowing distinction between public markets and private markets?
I'm a big advocate of disclosure, transparency, and you have that to a much greater degree in public markets than you do in private markets. I think more than anything in public markets, this is actually very real in the context of AI. You have a price discovery process in public markets, which I'm quite certain you don't with private markets. And I think this year will be the ultimate test. You've got OpenAI talking about going public at a $1 trillion valuation. I don't see that. You're talking about Anthropic going public, SpaceX going public. So I think, to me, the big differentiator is things do get overdone, underdone. We've talked about that. You have bubbles in markets too, but there is a price discovery process which you really don't have in private markets at all. I think, to me, that's the big difference.
I mean, this isn't in the middle of my wheelhouse, but I just see private markets as having become so big, over the last 10 or 15 years, that I see them affecting public markets as well. I mean, that's sort of what I think is going on, is that there's information flowing back and forth, also now from the private markets.
Not just one way.
Yeah, that actually I feel that private markets might actually also be influencing public markets. Because of their size.
By the way, as an aside, I mean, we used to call it, the markets called it, people called it the SoftBank effect. I was at Sansan's side when he launched the $100 billion Vision Fund, which was just took private investing to a completely different scale. In 2017, when that $100 billion fund was launched, the total volume of venture investing in the Valley, in the United States, was $76 billion. You didn't have billion-dollar venture funds, Sequoia, et cetera, right? So it is, so Masa was pretty cutting edge of that. Of course, that Vision Fund didn't turn out okay, but not great. But it's just unbelievable what's happening with the scale of investing. The notion of OpenAI doing a private, now, there's a circularity in that, which we can talk about, which is very interesting. But the notion of OpenAI doing a $100 billion plus round is just insane.
I was in Japan for the bubble years, and I became very close.
This is the Japanese bubble you're talking about, the
Yes.
late 80s. Okay.
Yeah. And I was very close to the central banker, Shirakawa-san, who had been educated at U Chicago. And he said, before the bubble in Japan, I believed everything that I was taught at Booth, that you couldn't identify a bubble while it was building up. It was more costly to try and prevent it from building up than to deal with the aftermath. After I lived through the bubble years, I decided that was complete rubbish. I get asked more often than any other question when I go abroad about whether there's a bubble in the US, whether US exceptionalism is real. What do you think AI would tell you if you put that question to AI in a more nuanced way than I've just described to eliminate bias?
So
People should do that right now. Ask AI.
I'm not sure it would tell you anything trustable, to be honest, right? Because it would just reflect back at you what there is out there. So I wonder, I mean, I'm sure it would give you a coherent response that makes sense. I'm just not sure I would trust it.
I was going to say, that's actually, to me, that's actually not a very useful question, because I actually think bubbles are easy to spot.
Really?
But absolutely. I mean, valuations are overdone. You can spot that, but it's useless information. It's not a great insight. And I'll go back to my.
In a bubble now?
I'll come back to that, but it's not. It's actually not a useful question, because what are you going to do? Oh, we're in a bubble. Let's go out and sell. I go back to the example of 1999. You could have concluded based on valuations, you're in a bubble, right? But if you'd sold in the summer of 1999, as Julian Robertson started to do, short the markets, you would have missed out on the market doubling from there to March. And by the way, if
But would AI have done a better job?
well, AI would, again, it would give you information from an action, kind of in terms of information you could act on that's practically useless. AI would look at the analytics the same way a Damodaram or anyone would do, which said based on any rational metric we're overvalued, we should sell. But then that bubble could go on, you could still double up. Japanese, that bubble went on and on and on. They did a miserable job of cleaning up. That's a flaw in the Japanese system. The US deals with it much better. So I think the question of are we in a bubble, are we not, is not particularly useful or actionable. But I will answer your question directly. If you look, when people think of bubbles, they think of high flyers, the Magnificent Seven, NVIDIA, et cetera. Those valuations relative to what we've seen in the past are hardly stretched, right? I mean, Cisco at the height of the internet bubble in the year 2000 traded at 200 times earnings, right? NVIDIA trades at a relatively mellow, kind of 30 times earnings. I mean, that's not outrageous for a company that has dominant market share that's growing at 60, 70% per annum. Keep in mind, NVIDIA's cash flows have grown faster than its stock price growth. That is not irrational. That's not a bubble. You do have bubble in the private market.
One question about NVIDIA.
Yeah.
Do you worry about technological risk with NVIDIA, that somebody can come up with a totally new technology that makes them
not
obsolete?
totally new, but people are. It's a company called Cerebrus, which I have a small investment in, wafer scale chips. But it's tinkering at the margin. ARM is talking about creating a chips that's going to be more energy efficient, but nothing in the foreseeable future. But absolutely, I can say with a high degree of confidence that NVIDIA's margins 5 years from now will be lower because someone will come up with something that challenges that dominance. But that still does not suggest that this company is outrageously valued. No, it isn't. Private markets, different story. OpenAI at $1 trillion, I think it's nuts. SpaceX, $2 trillion, I think is nuts. I think that's a bubble.
Thank you so much.
Okay, thank you. Thank
you.
you so much to our
My
speakers.